All right, Mark here, and welcome to another Greenbridge Investing market analysis. In this session, I'm going to be going over Bitcoin, the major markets, and select stocks as the week comes to a close. So this is streamed on YouTube Live. If you have any questions, please feel free to ask, and I will do my best to answer them the best I can. If I can't fully answer the question here, I will make sure to follow up in the chat room. All right, so again, thank you for joining me. And let's get started. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, now, let's begin first with Bitcoin. As I've been saying, Bitcoin has been strong, okay? And there's been no question that now it's following through. And it squeezed right into the next resistance area that's been on my charts for months and months and months. And that's the 95.64 to 10.168 resistance zone. All right, now that we're up here, we're getting a little hesitation, but like I said in the chat room earlier, that's definitely not a sell signal. And there's no reason to get out of this thing if you're long. You just have to let it ride. In fact, if this consolidates further, this can turn into a continuation pattern here in this area, which, yes, it's a riskier trade in terms of reward risk if it generates another buy signal. But hey, if that's what it wants to do, you know, we can measure our risk from there, and perhaps we'll share another aggressive swing trade idea. It's possible, but there's nothing to do here but at this point, but let the winner run. Our second target was reached at 97.50, all right, and this thing is just on its way. This, of course, could have something to do with the buy the rumor, sell the news halving event coming up, just in a few days for the Bitcoin reward halving. And that's fine. But, you know, I don't go by that stuff. I go by price action, and price action still says strong. Now, the important part of this chart here is the key support has been adjusted higher. So 78.95 is the new key support, which means that if Bitcoin retraces, and there's a broad retracement, meaning gets all the bears excited and they think that it's a short, it actually can pull back to that level here, okay, that basically that 78.95, and still be strong. And that would be the greatest reward risk opportunity for a long setup if it were to produce something at such a level. But with this type of momentum, we're more likely to see the 8,500, which was an old minor resistance area, okay, which can be a new support. So those are the inflection points. That's what we're watching for. At this point, there's nothing to do. You don't chase this, and there's no reason to sell either. You just let it run. Okay, so nice move there. All right, let's go to the stock market. Now, again, you can't have opinions, right? That's what messes people up, opinions. People go into the market with an opinion. They say, oh, well, you know, the news said this, or, you know, I had this newsletter that said that. And you can't, when you're timing markets, especially in the short term, the only opinion you should have is the opinion of what the market wants, because the market is always right. Now, in this case, right, everyone was calling for the NASDAQ pullback, blah, 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 bearish nonsense, this and that. Well, you know, they were wrong. Now, on Monday in the podcast, we talked about this bullish pin bar, and we took out the high of that pin bar after hours, and we've been going higher ever since, going right into NFP, which obviously came out, as a non-event. I don't even know the exact outcome of NFP. I just look at the price action, and clearly, this isn't exactly bearish, not yet. Now, this may close as a bearish pin bar because, you know, we have about an hour and a half before it closes, and, you know, you may get it even though it's small. The thing is, on Monday or Sunday evening, if this takes out that low, basically like takes out like the 9100 area there, that could be the beginning of a sell signal, especially since it's in this vulnerable area here, which is a failed high region where it is right now. Okay, there's a probability that if it does fail here, you may see a broader pullback. But the first support we're looking at right now is this higher low region right here, which is 8,600. Okay, so again, that could provide an opportunity to pick up some more stocks like we've been doing. Okay, we had a nice buy in IOVA, which is performing well. We had a few stocks that, you know, benefited well from this general bullish movement. Now, if there is a broad pullback, meaning we take out that 8,600, we close below it, the next inflection point for this thing is still this 8,000 level. This is a key level. And in order for the market to stay bullish, it needs to stay above that. So even if we take out those supports, it doesn't necessarily mean that the trend has changed. Maybe momentum may be bearish, in order for it to reach such a level. But if we get that bullish reversal here, it's a long, okay? As long as the level is maintained. Now, if we close below the level and we start taking out lows after that, then that's when we change our outlook. But until that occurs, we do nothing but look for pullbacks to buy, because that's what the market is telling us. It's strong. I have no opinion. I go by what the price action tells me. And it's been very helpful during this bullish movement that everyone has all these bearish opinions. Okay. Anyway, so that's the NASDAQ 100. The S&P and the other indices, they may not look exactly like this, but the thing is, like Michael had asked yesterday in the chat room, the S&P was showing a lower high and all that type of stuff. And how was the best way to interpret that? And the thing is, as long as they're closing near their highs, that's not as important. All that's saying is the S&P may be relatively weak to the NASDAQ, but it's not helpful until we get a sell signal, because it means that if the NASDAQ pulls back, the S&P will pull back faster. But until that pullback unfolds, there's no reason to, try to take advantage of that. There's no reason to get short. There's no sell signal. Okay. So still looking for a higher low at some point, and we're going to look to capitalize on that by buying some of the stocks that we've been watching very carefully. All right. Now, with that being said, let's take a quick look at the DAX. Now, what did I say the other day about the DAX? I said that, it was a little bit behind, right? It was behind the S&P and the NASDAQ, right, when we were getting that red candle. And I said, but if the S&P and NASDAQ close higher, this will follow. Well, that's so far what it's been doing. I don't see any change in behavior here. Higher low should get a higher high, as long as the U.S. markets do their job. If they fail at some point, then you'll be stuck here with a lower high and possibly a relatively weak market like the S&P compared to the NASDAQ. And that could be a sell signal for, a swing trade short on the DAX, for example, if you look at the DAX CFD. Now, I'm not saying it's a short now. There's no reason to do anything right now, but wait. But if those markets turn, and this is in a position that has not taken out its high, then it may offer at least some potential on the short side, okay, for a quick swing trade, meaning, you're in it for maybe a week or something like that, and that's it. Because until we start taking out major support levels, we can't expect a lot from the short side, all right? Especially if you want to look at all the fundamental stuff and all the stimulus going on and this and that and all the money that's been poured into the market, that's going to support the market. So you really don't want to go against that, all right? Now, that's the DAX. So again, if you're in any European denominated assets, really nothing to do but let it run, okay? If you have anything there, because there's really no reason to do anything. There's no sell signal, there's nothing. All right, let's take a look now at oil. Oil has been interesting. Now, there's been some confusion on oil. We sent out a swing trade on oil the other day. And the symbol that we sent it out on was WTI COUSD, which is Owanda. Okay, that's their symbol. Now, at one time, before all this nonsense of the oil going to zero and all that stuff on the futures, these prices used to be in line with each other. Forex.com, FXCM, Owanda, MyFX Choice, everyone that offered an oil CFD. But since this nonsense, the prices are they're all over the place. Okay, so here's the thing. So depending on the broker you use, there may be a different symbol. You need to look up the symbol, make sure you know what symbol it is. And the other thing is the prices may not match, and that's okay. What you're looking for is the chart to be similar. All right, so we called the trade at like 20. I believe the buy signal was at 20 something. All right, it never triggered, but as you can see, that came from this chart. So on your chart, if you're using someone else other than Owanda, then your number may be different. This high may be a different number. It may be like 25. So you need to do that translation based on your broker, all right? But the chart, the price activity on the chart, even though the prices may not be the same, the structure should be the same, all right? That should not be any different. So again, we're still looking for longs on this thing. This may be a nice long candidate for early next week. All right, so oil for a possible long, the CFD. We have this nice higher low established around this 1780, we could just say 1750 level around there. It holds above that, you're in line to make a higher high, which can easily take this thing into the low 20s, okay, based on this chart. So make sure you're clear on that. If you're not sure or you're still confused, please put it in the chat room or send us an email, because it's very important that you understand the price of your symbol and what you're getting into if you're taking the CFD long. Now, of course, there are stock alternatives we talked about, like MPC, VLO, and stuff like that. So those are, alternatives to capitalizing on a broader move in oil as it recovers. Okay, so that's oil. We're bullish there, just waiting for our trade setup. Now, let's take a look at the euro. The euro is a trade idea that I sent out yesterday evening. All right, and here's the thing. So oil, euro, we were looking to play the NFP number, right? Typically NFP, which is usually the first week of the new month, it's the most eventful Forex news item that you usually get. Meaning it has the most potential. It can create a broad move one way or the other. The thing is, we don't sit there and watch the news and try to interpret, the report. What we're looking at is the price action. Now, the NFP event itself was pretty much a non-event. The euro had not moved after the release of the NFP report. The move came after. Okay, so the trigger to go long was at 108.55, and this obviously went as high as 108.75. So it went higher, and now it's fooling around, it's a little bit below the trigger price. It's showing a bearish pin bar, but we're not going to do anything with that. Obviously, the trade is active, so we're going to go into this on Sunday, see how this goes. Typically, we don't like to take Forex trades into a Sunday. We usually like to start out the new week clean and start, with a trade idea then if there's something. But, the position is active now, so we let it run. There's nothing to do here. The stop is pretty wide on this. The location is attractive. So the reward risk still makes sense here. It just, these things get noisy and you just have to be patient with them. So nothing to do there, but let it run and see how the trade plays out. If there's a reason to exit early, we will send something out either on Sunday evening or early Monday. One good reason would be you take out the low of this pin bar, which is, what is that, 108.15. So basically you start pushing below 108, compromise the 108 level. That could be a reason to unload early since the stop is wide. This again was a 1% risk because of the elevated risk presented by NFP. All right, so any questions there, please ask. All right, so that's the euro. Now, I want to go over a couple of stocks here real quick. The first one I want to begin with is IOVA. I know I've been talking about IOVA all week, but on Monday, we talked about it in the podcast, and we also sent out a trade idea earlier that day, or was it Monday or Tuesday? I don't remember exactly, but the trade idea was to go long in this area based on this price action, right? Starting with, this was Friday's pin bar. Then we had this outside bar on Monday, so I believe that the trade was actually active on Tuesday, and they had their earnings report, and now look at it, okay? So this trade, it worked out very well. They don't always work out this well, but the key to learn from this is it was at an attractive support level, and it was giving supportive price action. I mean, everything was in line. It was a higher low. This key level was, we were fooling around there, and it was the price action was showing signs of reversal where we could measure our risk from. You can't ask for any more than that. Right, thanks. So now it's on its way, closing strong, it looks like. We still have a little, in about an hour, but just let it run. Let it run, right? Let your winners run. Yes, nice. Are you in this one, Michael? This is they don't all work out like this, but definitely one of our better ones. Okay, so that's IOVA. Now, we had a question in the chat room about AGM. So I'm going to put AGM here. I've never looked at AGM before. I'm not familiar with it. I guess this is it. Now, I mean, look, this looks very similar to the energy sector to me, right? Right away, I see higher lows, and I would anticipate a higher high if the market cooperates. Now, again, I don't know what they do. You have a resistance right here at 68. So you need to clear that 68 level if you want this thing to go anywhere. All right, you close that gap that you had, a few weeks earlier. Okay, great, nice, Michael. So yeah, this one, if you're in this, it's showing signs of strength. Just let it run. Okay, nothing to do. Now, if you take out a support, you take out 59, you close below that, that's a problem, right? It shouldn't do that. If you want to try to give it a little more room after that, okay, but you start pushing these supports, like around this 50 level, a strong stock should not be doing that. Okay, so that's what I'd say about that. Those are the inflection points to look out for. Another one is Urban. Okay, ticker URBN, this Urban Outfitters. So this is one that we called, like a week and a half ago, 2 weeks? I know, I think, Michael, you were in this one. Michael had a great exit on this one, right? It didn't even reach its first target, and Michael got out like right here on this island reversal. He top ticked it, right? So some retail trader bought it from him thinking that it was going to just, keep going higher. But Michael knew better because he listened to us, right, Michael? So anyway, nice trade on that. Nice way to reduce your risk. Now, since then, it pulled back, but it didn't take out its stop. And that's the key thing with this. That's why, we had questions in the chat room when it was pulling back, like, hey, should we get out of Urban because it's, it's not looking so great and this and that. And my answer to the question is, we set a stop, our risk is predetermined, and usually we let the market determine the outcome of the trade because we're tracking a lot of different things and we can't babysit every single trade. So the stop has to do its job, and the market never went to that stop. Okay, so that's that, right? So now we're still in the trade. We let it run. Nice close, nice strong close today. And, again, we let the market determine the outcome of the trade. So hopefully now we have this nice higher low double bottom situation in place off of this 15 area. Hopefully we can get that push to the higher high if the market cooperates and, actually reach its first target and perhaps second target. But this thing still has some room. And what I like about this double bottom situation here is it's now forming a consolidation. And these are typically trend continuation patterns. So keep in mind, we need a cooperative market. If the market stops cooperating, all these stocks are probably going to, go the wrong way as well. All right, so that's pretty much what I wanted to show. Were there any other stocks that anyone would like to see? Any other tickers? Doesn't have to be a stock. If you want to see another market, like, while I'm waiting for you for some questions here, how am I doing with time? Okay, yeah, so I'll show you gold real quick. Gold has been nothing but a pain, okay? 1 minute it's like strong, and then it's weak, and then it's strong, and then it's weak, but it's consolidating. So this is why you have to be careful with your stop placement on something like gold, because if your stops are too tight, then you get stopped out of this constantly, okay? And it's really annoying. This thing is, and it's consolidating. It's not even pulling back. It's not even in a trend reversal or anything. So you just have to be patient with gold. Any retrace to this range low area in the 1670s, I'll look to put on another swing trade idea, at least an aggressive one, to try to take advantage of that range low. Okay, Sean. Hold on, Michael. ACB, sure. I'll take a look at that. Sean, do you get concerned with the overall pattern of these stocks? Sort of like, okay, good question. Good question. All right, so first let me jump to ACB as per Michael's question here. And ACB has been, talk about annoying. Okay, ACB is Aurora Cannabis. This one of these cannabis stock that I called a few weeks ago, based on the higher low that was developing. It was right here in this 89-cent area, and since then it's just been doing garbage. Even though CGC tried to have a little run there. And here's the thing with this. So this, I mean, it looks ugly. There's no question. It's looking bearish. It's trying to push a little lower today. This thing is at 66 cents. Now, I don't have a huge position in this. My stop is at 45 cents. I'm just going to have to give it to the stop because, here's how these things play. 1 minute they look like garbage, right? And then some news comes out that the chart does not account for, and next thing you know, it's up $1, right? And that's the game I have to play with it. So basically, we're looking for like a lottery ticket type of situation because the chart is certainly not favorable. But these type of stocks don't exactly, a lot of times, they have like a surprise that comes out that gets them going. So you just have to take that chance. And if you don't want to take that chance, that's okay. At this point, if you're not liking it, I mean, it may be against you like 20 cents or whatever. Hey, that's not a huge loss. Take the loss. Nothing wrong with the small loss, right? The small loss is the best loss. For me, I'm willing to give it to that stop, and that's that. So either the market's going to cooperate with me or it's not. But do I like this chart? No. Is there anything bullish about this chart? No. Okay. I mean, I'm not crazy about this, but it's a super cheap stock, and I know that some little surprise could come out and turn this thing around, and we're not going to see it coming on the chart. All right, so that's my answer for that. So you have to make your decision on that. Remember, and also if you get out, you can always get back in, especially a stock like this. So, all right, Sean, are you concerned with the overall pattern of these stocks and index looking sort of like a bear flag? Okay, so now, Sean, where do you see the bear flag? I'm going to go to look at the NASDAQ 100 again. And bear flag. I don't see a bear flag on the NASDAQ 100. Can you give me an example of an index or a stock that's showing a bear flag? Because this, to me, this is the NASDAQ 100, which is pretty much the leader. And there's really nothing bearish about this thing. We're pushing high. The only vulnerability I see is we're in a failed high area location where it can fail here. There's a higher probability that it fakes out. That's the only thing I can see, but I don't see any evidence. Like I don't see a bearish pin bar. We're not taking out any previous days lows. I don't see anything like that. So I have to believe it's still strong. So let me know what an example of a bear flag, and I'll take a look at that. Okay. Giancarlo, New Zealand was mentioned. Better off to wait for a pullback. Okay, let me take a look at New Zealand real quick. New Zealand against the US dollar, it's going to be similar to the Aussie against the US dollar, right? They kind of move together, sort of. Yeah, in this situation, if you notice, it looks similar to the NASDAQ. Ignore these horizontal lines. They don't belong there. But, you have the higher low, and it's trying to push that high. It's attempting to close strong. Hey, if you're not in this, you don't want to chase it because you're running the risk of it could turn into a double top. What if it breaks out and keeps going? Will you be upset that you missed it? Well, you shouldn't be. The reason is, if you buy it right now, okay, you have to look at the risk you're taking. And the risk is pretty high because you figure the stop has to be somewhere below this low, which is 59.94. So you can't put it exactly there. You have to give it a little more room. So you figure 59.75 or something like that, right? That's the risk you're looking at. So you're looking at a few hundred pips. What's the high of this thing? 60.83. So about like 150 pip risk. That's a lot for this thing. That's why you don't just jump in and hope that it breaks out, because the risk is too high, right? You're better off waiting for a pullback of some kind. Let it break out, let it do its thing, and then we'll be able to find a better reward risk that makes sense, and then we can take a trade like that. So that's the New Zealand dollar. Okay, let's see. Yeah, Michael, I agree. It'd be nice if the thing would do something, interesting. Channel up after. Okay. Sean, I'm not sure what you mean. Okay, DJ. Sean, can you just give me like a chart, like a ticker that I can look at so I can get a better idea? All right, so DJ, VLO. So VLO, this is one of the stocks that Andrew talks a lot about for the oil recovery. Okay, as oil recovers, wow, and this is a nice looking recovery right here. Nice chart. I mean, you have the higher lows in place. Okay, keeps out taking its highs, and it's poised to take out another high. This will probably coincide with an oil breakout. I mean, that's what this is looking like right here. So you have these highs right here at 66.92. So you close above that 67, or you push 67 on Monday, this thing is probably going to push higher. The next resistance on this thing is like 79-ish, right around there. It's like you could say 79.5. somewhere in those 79s. That's the next key resistance. So you got some potential there. Okay, I like this a lot. So again, we've been talking about this for a while. I know Andrew has. The thing that you want to watch out for, the problem comes when you take out a low. That's when it becomes problematic. It could go into a range. You can have some more weakness coming, and that would probably coincide with a pullback in oil. And right now, that level is 57.5. So you need to stay above 57.5. And that's also a good place to measure risk from. I don't know where you're in from on something like this, or if you have it. Now, this may be an aggressive breakout trade, especially if oil breaks out. This is something that I could see us taking a small bite on, to try to capitalize on that breakout, or, a small add, perhaps, something like that, because everything is lined up and, you need oil to go, and oil is going. So that's a good candidate for next week for sure. Nice question there, DJ. Okay, so let's see, Michael, which one means is like the IWM, looks like a bear flag. Okay, IWM. All right, so let's take a look. The IWM is the Russell 2000 ETF. And we've been watching, actually, we watched this one a lot for relative weakness because it's nowhere near as strong. Clearly, the NASDAQ and the S&P are like, way up here, relatively speaking. And this thing is just like, not even close, right? That's relative weakness. So now the bear flag, oh, I see what you're talking about. Okay. So you're talking, if I draw the flag, which would be two parallel lines, if I could put them on here real quick, right? The two parallel lines, you'd have one like this, okay? And then you'd have one like this, right? So that would be, and it breaks the support area of that flag, that would be a bear flag. Is that what you're referring to? Now, if that's the case, here's the thing. Yes, that is some cause for concern, but keep in mind, just because there's a flag formation there doesn't mean it will activate. A lot of times you'll see this with head and shoulders formations. They're there, everyone gets bearish, they never activate, and then the market continues to trend higher. So you have to look at the lows versus the highs. As long as these higher lows stay in place, and I talked about this back here when we had this consolidation. Okay, I talked about it back here. And I said, you know what, this consolidation is a higher low. Not exactly the best place to get short. Now, Andrew, we called this short, tried to play like this bearish activity in here, got stopped out, and you know what? This is going to follow the market. If the S&P and NASDAQ continue higher, this thing has no choice but to go higher, even though it's relatively weak. And that's the thing you can't get confused by. Relative weakness doesn't mean that the market is weak. It just means that when the broad market turns, this will turn faster. So this would be the short candidate if we get something like that because it's, relatively weaker. The S&P probably also. But right now, we have this higher low at 122. So in theory, if the NASDAQ and S&P push, we should get a higher high in the IWM as well. There's nothing here that says go short. There's nothing bearish about this. So, when it turns, we'll look to short the IWM, like he likes to short calls. You can buy puts. You could sell the IWM outright. You could sell the shares outright and be short. But until we get a solid reason, there's nothing to do. But let this thing, stay out of its way if you're looking to be bearish. Okay, good question. Great question. Florin, okay, the alts are lagging behind BTC. Do you expect them to catch up? Okay, great question, Florin. Altcoins. So the altcoins, here's how I picture those. I treat them as an extension of Bitcoin. They're just smaller variations of Bitcoin. The altcoins they don't lead, okay? Here's like Litecoin, for example. They don't lead. Bitcoin had that nice rally. It's starting to hesitate. Now they're starting to follow along. They lag, and that's what they do. So they may not be moving with Bitcoin 1-to-1, but you have to use Bitcoin as your key reference. If Bitcoin pulls back right now, and it pulls back to like 7,300, do you think these things are going to go push a high and then pull back? No, they're probably going to pull back right away. Okay, so that's something you have to realize with these things. If you're in the alts, this is an opportunity to reduce risk, in my opinion. until they can really prove themselves. You have a higher low higher low around this 44.25 area on Litecoin. In theory, it should take out the higher high above 50, but Bitcoin needs to cooperate. So if Bitcoin turns, it gives us a sell signal at some point, this thing will probably turn sooner. Because again, just like the IWM relative to the NASDAQ, this is relatively weak, but not necessarily, there's nothing bearish about it. It's not in a bearish trend. Same with Ethereum. Look at Ethereum. Same situation, right? Nice higher low. Great. This is great structure. Don't want to get in its way. If don't want to short this stuff, that's for sure. There's no reason to short it. If I was long this, I would just let it ride and just see what it can do, and hope that Bitcoin can just keep doing what it's doing. Now, keep in mind, again, this is an opportunity like we've been doing. We've been lightening up on the alts and basically rotating that money back into Bitcoin when we have the opportunity, because that is the leader. And until that is no longer the leader, that's what we're going to do, because these things just have not proven themselves. Now, remember what I said earlier. The halving event is coming up, and that could be the buy the rumor, sell the news situation, and that will affect all of these coins. So if they sell, sell the news, right? Buy the rumor, sell the news. If they do that with Bitcoin, and Bitcoin has a more dramatic pullback, watch out on these things. They're probably going to get hammered a little bit more dramatically. I don't think they're going to go all the way back to these lows. I find that hard to believe, because Bitcoin would have to do something like that. But these things are just basically, they'll pull back to some sort of minor support and then linger there for a while, like the 180 area or 170s on Ethereum. So, if you feel like sitting through that, if you're very long-term, fine. If you don't feel like sitting through that, then, use this as an opportunity to at least reduce some risk when you can. Okay. That could be Florin, but I don't follow any of that stuff. I don't have any opinions. I just go by the price action. And maybe fundamentally Litecoin will be more attractive. It's possible. But, until I see price action that proves things to me, I really don't care much about what goes on behind the scenes, because it doesn't help. See, I go by the one concept that price is a discounting mechanism, and all the information in the world, all the known information is baked into price. So price tells me what's really going on or what's not. So that's why I don't have any opinions. But, we have to see how it plays out. Great questions, everyone. And I really appreciate the participation. Again, I talk a lot. I'm over 30 minutes into this now. Any other questions before I wrap this up? Again, nice way to close out the week. We had some great trades. If there's a question that maybe I missed or I didn't fully answer, please feel free to follow up in the chat room, and we'll answer in there as well. We have a lot of stuff going on in there. So, again, I want to thank you all for joining me. Any other questions? I'll answer one more question, and then I'm going to wrap it up. But I love that you guys come in here and participate, because you really bring a lot more than just me talking about a bunch of charts that I like. I want to know what charts that you're interested in, so I could make these more valuable for you. All right, so I don't see any other questions. All right, great. So again, thank you all for joining me. Enjoy your days off, next couple of days. We'll see you in the chat room on Sunday, Monday. We'll be sharing stuff in there, and we'll see what's going on then. All right. Again, any other questions, please feel free. Share them in the chat room, and we'll go from there. All right, no problem. Have a great day. I'll speak to you all soon. Take care. Bye.